So on stage just now, you were talking about stabilization of the oil market. How much progress is OPEC making? Are we likely to see a stabilized oil market in 2018?
Thank you very much for having me. I'm glad that you listen attentively to my remarks at plenary when I shared with delegates at this very important conference the significant progress that we have made together with our non-OPEC friends in aiding the oil markets to return to stability. We are continuously seeing massive destocking across all regions, both crude and products. And our latest numbers to be published later today in Vienna will even come with more positive numbers. We have seen that the overhang of inventories have now plunged below 140 million barrels. And out of this 140, we are talking of less than 30 million for products and just about 110 million for crude. So for all intents and purposes, we are beginning to see a return to stable markets in the fullness of time, something that had eluded us for several years, and due largely to the concerted efforts of the countries in the Declaration of Cooperation, which had just been extended, just 2 weeks ago extended for the whole of 2018, bringing together, again for the first time in history, 30 producing countries to show solidarity to the efforts that we first took in December of last year.
Given the progress that you're seeing, are the Kuwaitis right, do you think, to suggest that there is a possibility that in June of 2018 this deal, this agreement on production cuts could come to an end, or at least the discussions could start at around that point?
I think this had been discussed at great length in Vienna on November 30th by both OPEC as well as the OPEC, non-OPEC, and hence the decision to extend the supply adjustments for the whole of 2018. And at the moment, we are in the process of putting the building blocks, if you like, for a more permanent framework of this declaration of cooperation beyond the rebalancing of the oil markets.
So that relationship between OPEC and Russia, for example, could be extended, that working relationship, beyond this deal, this agreement?
We had already agreed as far back as the 10th of December of 2016, when we were crafting the Declaration of Cooperation, that we wanted to see this platform that first brought together 24 producing countries to help the market to return to stability, to be developed into a permanent platform for producers that would ensure insurance to sustainable stability. Therefore, the supply adjustments are just one pillar of the Declaration of Cooperation. The building blocks that we are putting together now will further entrench and develop this partnership with the non-OPEC beyond the rebalancing of the market. And you have already started seeing more countries are knocking on our doors. We had 6 additional countries in Vienna 2 weeks ago, bringing together 30 producing countries, the first in history, all reaffirming and showing solidarity to the Declaration of Cooperation and showing intent of being part of this noble objective in the interest of all producers, consumers, and also having a knock-on effect on the global economy.
The Kuwaitis have also said recently that Russia is keen to move on from this production cut as soon as possible. Are you getting a sense that is that the impression you get from your Russian counterparts?
Both the Russian Federation and the state of Kuwait have played significant, in fact, leading roles in getting us to agree on the historic and landmark decisions of last year. And in fact, both Kuwait and the Russian Federation co-chairing one of the key organs of the implementation of the Declaration of Cooperation, that is the Joint Ministerial Monitoring Committee, and therefore have not only been part and parcel of all these decisions, but they are overseeing the implementation of these decisions.
And you talked about stockpiles. When are we going to see inventories move down to their 5-year average?
They are inching towards that. It has been a very long and tedious journey, beginning from January 1, when we started implementation of the Declaration of Cooperation. On the whole, we have seen, even to the consternation of many, over 100% level of conformity on average from January to October. And the November figures are just about to be released in Vienna, and all showing very positive, high level of conformity. And this goes to show the high level of commitment of these nations who voluntarily came together in order to assist the oil markets to restore stability as well as equilibrium.
A big question for many is what the exit strategy is from this agreement. Have those discussions started? How do you unwind this deal for the nations involved?
We are actually working on a continuity strategy that will ensure the institutionalization of the Declaration of Cooperation, including its key element of supply adjustment, so that we do not only restore stability, which is within our reach now, but we have to sustain this stability going forward. In both crude oil and products, we are now talking of a mere 130-something million barrels over the 5-year average. And as I told you, in terms of products, you are talking of less than 30 million above the 5-year average. And you can see this is across all regions, and both onshore and offshore. The fundamentals of the oil market have not been this strong in the last several years. And it's also having a multiplier effect on the global economy. So both global economic GDP rebound as well as strong oil market fundamentals for the first time in so many years are all going in the right positive direction.
The numbers that we're getting out of the US now, there are some forecasts suggesting that we could be seeing 10 million barrels per day in terms of US production. How do you factor that into the OPEC strategy?
Yes, in drafting our strategies and reaching the agreements that we reach, in particular the amended Declaration of Cooperation 2 weeks ago for the whole of 2018 has taken into account the challenges and the uncertainties that non-OPEC supply, particularly U.S. tight oil, is facing. And therefore, the decision was not only timely, but holistic.
And you think in terms of U.S. production, we could see a peak around 2025, is that right?
Well, in terms of our world oil outlook, which we just rolled out on the 7th of November in Vienna, we can see that non-OPEC supply, particularly U.S. tight oil, continuing to decelerate in the medium term to a plateau and peak by mid of 2020s going forward. You also have to acknowledge that there are significant challenges and uncertainties facing the shale basins of the United States. But nevertheless, we in OPEC, we acknowledge that we are all part and parcel of the same boat. We belong to the same industry, and shale oil had played a significant role in meeting demand. And therefore, going forward, we look to continuing our dialogue with the independents in the shale basins so as to have a common strategy in participating in this market.
What's the demand outlook for China, given the expectations of a slowing economy here?
Well, we have not seen the signs of a slowing economy. As I told you yesterday, we spent the whole day with the Chinese authorities in our energy dialogue. China will continue to be the growing end of the global economy, and by extension, demand growth for oil China, as a matter of policy, are not discriminating against any source of energy. They are seeking to balance and diversify their sources of energy, and they will continue to rely on dependable sources of oil, particularly OPEC, to meet their current and future demand.
Have you adjusted your views on price given the strong global growth that we're seeing?
Prices have not been part of our consideration as a matter of policy. We focus on the fundamentals of supply and demand. It is obvious that the disequilibrium that we have seen in this market in the last couple of years was due largely to this equation going out of balance as a result of supply factors that impacted on stocks, inventories, and hence our focus to assist the market in managing these stock levels to accelerate the drawdown to bring them to the 5-year average.